Well, hello everyone, and thank you for joining today's DCAA training. My name is Kelly Friel, and with me today is my colleague Chuck Beck. We are members of the NAPEX National Training Team, and NAPEX stands for the National Apex Accelerator Alliance. And we would like to welcome you on behalf of NAPEX and your local Apex Accelerator. So your local Apex Accelerator is a proud member of NAPEX, and we are glad that they are co-hosting today's DCAA webinar. The Apex Accelerator network consists nearly of 700 government contracting experts in over 300 offices throughout the U.S., including Puerto Rico and the Virgin Islands and Guam. Under management of the Department of Defense of Small Business Programs, Apex Accelerators provides education and training to help companies prepare and position themselves for government contracting opportunities. If your company is interested in government contracting and you have not yet engaged with your local Apex Accelerator, I would encourage you to do so. You can learn more about Apex Accelerators at the website listed on the slide below. And so what we'd like to share is that while each Apex Accelerator program may be set up and operate a little differently, in general, the Apex Accelerators provide training and assistance with registrations and certifications. We can also provide market research and bid match services. In many cases, we can help companies learn to navigate and position themselves for government contracting opportunities. Many Apex Accelerators also host events to connect businesses with government contracting professionals and prime contractors. And an important role about Apex Accelerators is to serve in connecting America's businesses to resources and opportunities. So, and just a few housekeeping items for today's event. Lines will be muted during today's presentation. Please post any questions that you might have in the Q&A, and we will try to answer as many as we can. And then also, slides for this training will be sent out to attendees within the next few days. So with that, we are joined by Ms. Alyssa Triber with Defense Contract Audit Agency, also known as DCAA. She will also have joining her later, LaShaya Cooper. Ms. Triber will be sharing insights into elements of adequate proposal and overview of contract proposal pricing during today's presentation. Now, please join me in a warm welcome to our friends at DCAA. I would like to turn the program over to Ms. Alyssa Triber with Defense Contracting Audit Agency. Please take it away, Alyssa.
Hi, thank you. Hello, good afternoon, everybody. My name is Alyssa Triber, and I am a financial liaison advisor here at DCAA on the Navy team. So thank you for having me today. I feel the warm welcome. I appreciate it. As it was mentioned, we're going to be talking first about elements of an adequate proposal. And then we'll get into, on the next slide after a quick break, we'll get into the discussion on an overview of contract proposal pricing. My colleague, Ms. LaShaya Cooper, who is a fellow FLA on my Navy team, will hopefully be joining us. I think we were having a little bit of technical difficulties, but hopefully she can make it in, and we were going to kind of popcorn the presentations a little bit to break it up, so y'all don't get bored of just hearing my voice the whole time. But hopefully she can make it. We will jump right in, though, and get this started. So moving along to slide 7. And I can't see the slide, so I apologize if there's a little pause. I just want to give enough time to get transitioned. But this is a brief overview of what we'll be talking about today. So we're going to start off with talking about price proposal adequacy. We'll take a look at the checklist, see what the actual adequacy checklist looks like. We'll talk about some common proposal deficiencies or noncompliances. And then we're going to talk about what constitutes adequate cost or pricing data. And we'll round it out with online resources that we have to assist in assessing proposals for adequacy. All right, next slide, slide 8. this is where we're going to kick it off with proposal adequacy. Now, it's the contractor that bears the burden of proof in establishing reasonableness of proposed costs, and they're the ones that are going to be responsible for providing adequate supporting data to support their proposal submission. So an important element in ensuring that pricing proposals are adequate is maintaining an acceptable estimating system. So DFARS 215-407 570B1, sorry, it's a mouthful, states that it is DoD policy that all contractors have acceptable estimating systems that consistently produce well-supported proposals that are acceptable as a basis for negotiation of fair and reasonable prices. So what does an acceptable estimating system mean? Well, per DFARS, an acceptable estimating system is one that is maintained, reliable, and consistently applied. It produces verifiable, supportable, documented, and timely cost estimates that are an acceptable basis for negotiation of fair and reasonable prices. It is consistent with and integrated with the contractor's related management systems and is subject to applicable financial control systems. So in summary, maintaining an acceptable estimating system is going to help ensure the integrity of the pricing proposals being submitted to the government. And in order for a pricing proposal to be adequate, the basis and rationale for all proposed costs should be provided as a part of the proposal so that the government can place reliance on the information that is provided as current, accurate, and complete. All right, moving on to the next slide. Slide 9, price proposal adequacy. So how is proposal adequacy determined? Well, the regulatory criteria and what DCAA adequacy reviews are based on is FAR 15408, Table 15-2. And this section of FAR is going to outline in pretty good detail what information should be presented and or made available to the contracting officer when a proposal is submitted. And in 2013, a new DFARS 252-215-709 clause was implemented requiring contractors to submit a proposal adequacy checklist with their pricing submission when cost or pricing data are required. And we'll talk more about when cost or pricing data is required later, but in summary, it's when the pricing action is over $2 million and doesn't meet one of the FAR exceptions to providing that certified cost or pricing data. So DFARS 252-215-709 states that the offerer shall complete the adequacy checklist. Uh-oh, can you guys hear me? Hello?
Yes, we can hear you.
Okay, okay, good. All right, sorry, I don't know if did I cut out for a little bit?
No, I can hear you just
Why
fine.
not? Okay, great. Thank you, appreciate it. So the offerer shall complete the adequacy checklist, providing location of requested information or an explanation of why the requested information is not provided. And once the contracting officer receives their proposal, they're going to make a determination regarding the need for audit by DCAA. And when DCAA receives the proposal, the first thing that we will do is review the proposal using the adequacy checklist that is in DFARS. And I don't know, are you able to pull up that adequacy checklist? We can just kind of briefly look it over.
Sure.
If not, that's okay, but.
I can try and move it over to this other window.
Okay. And I won't go over it in too much detail because we are going to cover a lot of the, or most of the elements in this actual presentation, but I just kind of wanted to give the audience a general understanding for anybody that's not familiar. Do we have it up?
Yeah, so we do have it pulled up on the screen, the DFARS
Okay.
215-7009.
Yeah. Yeah, perfect. So this is the one that you will actually find in DFARS if you go there and look. And This is the one that we follow when we assess proposals for adequacy when we first receive them if we're requested to do an audit. And the top part is just, general instructions relating to filling out the form and, background information about the contractor, if there's been any CAS noncompliances identified, if there's non-recurring costs, stuff like that. And then we get into the actual cost element section, which is where we're really going to have our focus, our discussion today. And if we scroll down to item 14, it's kind of where it begins, materials and services. And the main thing for that one is going to be the consolidated bill of material, which we'll talk to later. And then getting into subcontracts. If there's thresholds in FAR 15-404-3C for subcontracts, and if the subcontract amount exceeds those thresholds, then the subcontractor needs to submit certified cost or pricing data that would be rolled up into the prime submission. So there's a checkbox for that. And then a big one with subcontracts is whether the prime performed those cost price analyses, which are required to be performed by the prime on any subcontracts over that certified cost or pricing data threshold. And then we get into the certified cost or pricing data questions, interorganizational transfers as we scroll down, items 21 and 22. The next cost element is direct labor, which we will speak more to today. Indirect costs, where we're going to be checking for those basis of estimates and whether they're basing their estimates on budgetary data. Other direct costs, and we want to see valid BOEs for those. And so this is a gist of the checklist. It's pretty self-explanatory. The very bottom has some other considerations like economic price adjustments, which might be more relevant in today's environment. I've been hearing commands talking about using those to address maybe uncertainties that are arising from tariffs, potential tariffs. So that's that section. So any questions so far? That was just a very quick overview of this. Like I said, we'll be talking more as we go through these slides on the specific cost elements. Okay. So then I think we can go ahead and move. Oh, do we have a question?
There are a couple questions if you'd like to take these questions. So estimating system, this is our ERP system, correct? That was the question. It just says estimating systems. This is our ERP system, correct? They want confirmation, it appears.
Yeah, so the ERP system would encompass I believe the accounting and estimating. It would all, I believe it should all be encompassed in there, but typically when I hear ERP system, I think more of accounting system, but I believe you could have functions for the estimating in there as well.
Okay, and then we have another question. Does price proposal adequacy apply to SBIR proposals as well? For example, as a small business generating proposal for several SBIR solicitations that are related to research and development and technology. So would it be, does a pricing proposal adequacy apply to SBIR proposals?
Typically when I think SBIR, are they going to be over that threshold for requiring the certified cost or pricing data? I don't know that they'll meet that threshold. So the requirements for certified cost or pricing data is going to be $2 million or more. And then I guess from there, if you are required to submit certified cost or pricing data, you would need that proposal adequacy. And this is related to sole source. So there are exceptions to certified cost or pricing data as well, which we'll talk more to either later in this slide or in the next ones, but one of those being competition. So this is you think sole source pricing proposals over 2 million are going to require these proposal adequacies unless they meet one of those exceptions for submitting certified cost or pricing data. Now, we'll speak more to it also in the next presentation, but DCAA typically doesn't get involved in auditing those smaller proposals. Our thresholds for audit are generally going to be 10 million for fixed price and 100 million for cost type. But per DFARS, if your proposal does meet that threshold for requiring certified cost or pricing data, then you will be required to, perform this adequacy checklist and submit that as a part of your package.
Okay, great. We just have one more question, and they just wanted to confirm which
Mhm.
section did you say applies to tariffs?
Oh, that would be, we're still trying to figure that out because this is all new, but it wasn't specifically that it would apply to tariffs, but I was speaking to in the form, the checklist, adequacy checklist, we have an other section at the bottom, and it kind of asks if economic price adjustments are being proposed, does the proposal show the rationale and application for the economic price adjustment? And that's line 34. And so I was just kind of commenting that this could this could potentially be used economic price adjustments in the case where we have economic uncertainties like tariffs. I have been hearing commands trying to figure out, in their pricing proposals, how they're going to address those. It wouldn't really make sense for contractors to capture that all through just applying a higher escalation, because generally these tariffs are going to be like a one-time hit to the prices, and then escalated normally for those goods or services across the years. So commands have been talking about using a duty-free clause or this economic price adjustment clause, where it will kind of mitigate that risk of economic uncertainties.
Okay. I think we are starting to get some questions, but I think we need to advance in since we do have time and we can probably answer some of these questions.
Okay,
If
sure,
you're
at the end.
slide 10,
Okay.
correct?
Yep, slide 10. All right, so now we'll talk about the major elements that make up the proposals, which are addressed in the proposal adequacy checklist that we just briefly went over. And those are going to be direct material or direct labor, direct material, subcontracts, other direct costs, and indirect rates. So we can move on then to slide 11, where we'll talk about direct labor. All right, so in relation to proposed direct labor, an adequate proposal should include a time phase. So for example, monthly, quarterly, breakdown of labor hours, rates, and costs by appropriate category. It should include the basis of proposed labor rates and classifications, including any escalation factors that are going to be applied for the out years. And DCAA is going to use this information to then determine how the proposed rates were estimated, and then we determine how we would need to test them based on that information. So for example, if the proposed rates, if the contractor potentially has a forward pricing rate agreement or rate recommendation with DCMA, and the proposed rates are based off of that FPRA or FPRR, and maybe they've also been audited previously by DCAA, and that's how DCMA based their determination for the FPRA or FPRR. That makes our jobs a lot easier for auditing direct labor rates, because we would probably just go in and compare the proposed rates to that FPRR or FPRA, maybe perform some analytical procedures like math checks, and call it a day. Whereas if the rates have not been audited and there is no FPRR or FPRA to rely on, we're going to need to gain a deeper understanding for how the contractor sets their compensation package. Both executive and non-executive will need to ensure that how they're doing it and the aggregate of each element and the total compensation package complies with the allowability and reasonableness requirements of FAR 31205-6. And then, as noted here, we're going to also be evaluating the basis of the proposed labor grades and hours assigned to each labor category. So it's important that the contractor has the necessary details and support in their BOEs for us to be able to perform this type of testing. And lastly, we're going to want to see the basis of the proposed labor hours. So are they based on prior experience or engineering estimates or some combination of each, so that we can perform comparisons of the proposed hours to experienced hours, for example, for production of similar items, and review any learning curve applications if there are any. And just a note on labor hours, we often do rely on technical reviews from DCMA or the command, especially for those that are heavily based on engineering estimates. We are accountants, not engineers, so oftentimes we know when to wave that white flag and ask for help. I think it's a whole other half of the brain that's used for that part of it. So, and then we would incorporate any technical reviews on those hours into our audit. All right, so moving on then to direct material. Do we have
And
any?
hey, Alyssa, I think that you just answered the
Uh-huh.
question that just popped up, but
Okay.
the question was, how does price estimating work with unique services? An example would be consulting on highly technical concepts, etc., because the price
Mm-hmm.
variance is really pretty large for that hourly or project cost at times.
Yeah. Yeah. So I guess it would depend on, a number of factors, but what's going into the base of the estimate. So how, what's going into those consulting services specifically, and how are the hours estimated for those services, and how is that rate built up? So it just kind of depends on, we would just want to see essentially how the contractor or the service provider is coming up with their estimate for the hours that are going to be needed to perform that contract, or and how they're calculating the rates to be paid. And then we kind of look into it and we see, okay, does this comply with FAR? Is this reasonable? And determining reasonableness can be based on a number of factors, whether it's whether we have history on that type of service being performed, or market data for similar services. Oftentimes for labor, we can use survey data, provided by various survey sources that provide for similar positions, provide similar, or what the going rate is for the market in certain areas, depending on the geographical area, that type of thing.
Okay.
And that's all. Also, hi everybody, it's LaShot. Can you hear me?
Yes, we can. Yay!
You guys hear me? Yay! And just to also add some additional feedback to that. So say like it's consulting services, that you guys like get different vendors for these consulting services. So that could be something else that we will look at, the different quotes to see how you came up with this price. One company might charge this, another company might charge this. So you guys gather different quotes to come up. So like Alyssa said, like what the main thing we're looking at is like, how did you come up with this? What is the source documentation? What is the data that you're utilizing to come up with these rates?
Yeah, thank you.
And one additional question that we just had, does this include 1099 independent contractors?
If that's a part of the proposed cost for a pricing proposal, then they would be included. Yeah.
Yeah. Thank you.
I'm not sure. I don't know if you know more about that, but.
Yeah, I know that some people for 1099s, they kind of like some people group them with their subcontractors as well, and it's two separate things. But yes, again, like Alyssa stated,
or like purchase labor maybe.
Yeah, right. So, but if you're proposing that in your cost, anything that you're proposing of these different elements, it would need to have some type of basis of just your basis of how you got to it. If it is like again, like I stated before, if it's exactly their quote or whatever they provided you, we would need to see that in order to determine the main things you're going to hear is fair and reasonable. You're going to hear that a lot. Is that cost fair and reasonable?
Yeah. Yep. Hopefully that answered your questions. Should we get back to material then? I think we're slide 12.
We're on slide 12.
Okay. So for material, an adequate proposal is, we saw on that checklist, the main thing that we want to see is that consolidated bill of material, which is going to summarize individual material quantities included in the various tasks, orders, or contract line items. In addition, that consolidated bill of material should provide the basis for pricing. So whether it's vendor quotes, invoice prices, competitive bids, include raw materials, parts, components, assemblies, and services to be produced or performed by others, and identify the item being procured and show the source and quantity and price. And that bill of material is really important because that's what we're going to use to identify, what items make up the bulk of the proposed material costs and how to test them. All right. So then we can move on to slide 13, and we'll talk a bit about price competition. So contractors need to provide data showing the degree of competition and the basis for establishing the source and reasonableness of price for those acquisitions, such as subcontracts, purchase orders, material orders, etc., exceeding or expected to exceed the appropriate threshold set forth in FAR 15403-4, which is currently $2 million, that cost or pricing data threshold priced on the basis of adequate price competition. So per FAR 15403-1, adequate price competition is one of the exceptions for providing that certified cost or pricing data. So FAR 15403-1 states that a price is based on adequate competition when two or more responsible offers competing independently submit priced offers that satisfy the government's expressed requirements. B, the award will be made to the offeror whose proposal represents the best value, where price is a substantial factor in source selection, and I'm highlighting and because it's all three, there is no finding that the price of otherwise successful offer is unreasonable. So that being said, contracting officers may require cost or pricing data or other than cost or pricing data when only one offer is received in response to a competitive solicitation. So even if they go out and compete it, if they only get one offer back, they still may require that cost or pricing data. Additionally, if an award is based on adequate price competition, contractors still need to provide data which shows the degree of competition and the basis for establishing the source and reasonableness of price for those acquisitions. So, for example, subcontracts, purchase orders, material. So degree of competition, we'd want to see the bids or the quotes from the offerers, and then there still needs to be price analysis or some sort of price analysis to show that that overall price is fair and reasonable. And we'll get more into price analyses and what those look like in the next presentation. So then we can move on to slide 14, subcontracts. In relation to subcontracts, an adequate proposal includes the basis of the proposed subcontract costs, including the prime contractor's cost or price analysis of all subcontractor proposals. So FAR 15404-3, subcontract pricing considerations, states that the contracting officer is responsible for the determination of fair and reasonable price for the prime contract, including subcontracts. The contracting officer should consider whether a contractor or subcontractor has an approved purchasing system, has performed cost or price analyses of the proposed subcontractor costs, or has negotiated the subcontract prices before negotiation of the prime in determinableness of the prime contract price. The prime contractor or subcontractor shall conduct appropriate cost or price analyses to establish the reasonableness of proposed subcontract prices and include the results of the analyses in the prime's pricing proposal. And then when required by FAR 15404-3, there are certain thresholds when the prime contractor is required to include the subcontractor's certified cost or pricing data as a part of its proposal. So I just want to note here that if you look at the adequacy checklist that we reviewed in detail, there is a box that contractors can check that they have not completed the CAPA for their subcontract, but they have a date. They have a matrix displaying the dates of when they're going to complete the CAPA cost or price analysis for all those subcontractors. So this satisfies the requirement for the adequacy checklist. However, I just want to note that that submission of the matrix with the dates does not overcome the non-compliance that the contractor hasn't completed that analysis and submitted it with its proposal, because it is a FAR requirement that primes perform those cost and price analyses on those subcontractors that exceed that certified cost or pricing data threshold. So that will need to be provided before going into negotiations.
Hey, Alyssa, we have
subcontracts. Yeah.
Yep. The question
Okay.
is, what if the subcontractor does not have an cost-approved system?
So like an approved estimating system or accounting system. Some subcontractors might not reach the threshold for DCMA having to go in and approve their estimating systems. As far as an accounting system, they would need to have approval if it were related to a cost reimbursable type contract or fixed price contract with progress payments. But some subcontractors might not have approved accounting systems if they've never held that cost reimbursable contract, because it's not a requirement if it's just a fixed price contract, firm fixed price contract, for them to have an approved accounting system. If they don't, but the contract type that they're submitting requires them to have that approved accounting system, the prime can reach out to, or even the subcontractor themselves can reach out to their government point of contact. So if you have a contracting officer, would be the best one to initiate this conversation and request that they initiate that accounting system review and to make that determination on the accounting system. And then likely they would come to DCAA and request that we do a pre-award accounting system review, which is where we go in and look at the design of the contractor's accounting system, make sure it's just set up properly. And those are typically fairly quickly turnaround time with DCAA. So that would be the best way to go about addressing that if they don't have an approved accounting system. As far as the purchasing system and estimating system, DFARS doesn't require that those are approved for contractors under certain thresholds. And I want to say it's maybe a $50 million in contract pricing with it. I'm not positive on the thresholds. So as long as they are complying with the DFARS requirements for, maintaining their estimating and purchasing systems, they don't necessarily need to have it approved if they don't meet that threshold for that DCMA review.
Yeah. And kind of along those lines, I think we have some questions about approved, and the term is systems, but I think it might be software. And so I believe that there's not necessarily approved software. It's really the system that would be approved. Is that correct?
That's correct. It's not one fits all software for accounting systems or ERP systems in general. It's whatever kind of works with your business model. And as long as it can, meet the requirements of FAR and DFARS for that system. So that's what we're checking. It could be some, contractors use QuickBooks and that might be fine for them. So it just kind of depends. But as long as those DFARS requirements can be met, we don't have one approved system over another.
Yeah, but QuickBooks in and of itself is not necessarily approved. It's how it's used within the approved system, right? Yeah.
Yeah, how the system is designed and set up to bill and accumulate costs on government contracts.
Yep. Thank you, Alyssa.
All right, so I think we're at slide 15, and we have some examples of inadequate subcontract analysis procedures. So the first one here we have is no cost or price analysis completed or documented, which we kind of just talked about on the last slide. But remember that cost analyses are required for those items that are over that cost or pricing data threshold of 2 million unless an exception applies. And then price analyses should be used whenever certified cost or pricing data are not required. And we'll talk more about the differences between these in the next presentation, so I won't get into too much detail here. The next bullet is failure to support the degree of competition or basis for establishing the source selection or price reasonableness, which we kind of talked about a couple slides ago, but there needs to be, if there is price competition, they need to have the sources of those source documents. So like I said, potentially, those vendor quotes, the multiple bids, and something that establishes that price reasonableness. So we'll talk more about that in the next slide, but price reasonableness, whether it's, they took the lower of the vendor quotes or it's in line with what the market is providing, or it's in line with PO history, that type of thing. Failure to perform commercial item determination or price reasonableness. So the adequacy checklist specifically asks if the offerer identified the type of commercial product or commercial service claim and the basis of which the commercial product or service meets the definition of a commercial item per FAR 2.101. And then FAR 15403C states that at a minimum, the contracting officer must use price analyses to determine whether their price is fair and reasonable whenever a contracting officer requires a commercial product or service. So even if an item is commercial, the contractor is not going to be required to submit that certified cost or pricing data, but they will need to be able to support that fair and reasonable price. So there will still be a price analysis that needs to be performed. And then the last bullet here is no documentation on attempts to perform analyses and seek government assistance when denied subcontractor records. So this one, oftentimes we see that prime contractors are denied access to subcontractors' detailed accounting records, that they are going to need to perform that cost analysis, especially on those indirect rates and therefore the indirect costs, which makes sense because sometimes contractors can be competing for the same awards in the future. So that's okay if the subcontractor denies the prime access, but in that case, the prime contractor's responsibility is going to be to reach out to the government, DCMA, DCAA, and request assistance in reviewing those subcontractor costs. So what we really want to see in regards to subcontracting is, contractors following the FAR requirements, of course. So if the procurement is sole source, performing a review of the subcontractor's proposal by reviewing accounting records, supporting documentation, et cetera, and using procedures, again, to determine if that price is fair and reasonable, such as benchmarking, comparing to industry standards, or if it's competitive, obtaining that competition, those source documents, to prove that there was adequate competition and that the fair and reasonable price is the one that we went with. Any questions? Okay, we can move on to slide 16, subcontract analysis. This slide just kind of breaks out some of the benefits that come from having the adequate subcontract analyses included in the proposals. When we don't receive those adequate subcontract analyses, we could end up unsupporting costs where we're not giving an opinion on those subcontract costs, or even issuing a non-compliance if that CAPA isn't completed by the time that it's required to be completed by, which we want to avoid both of those cases. So, that's why it's kind of really important to get that adequate subcontract analysis included in that with the prime's proposal package. And I guess I'll just open it up here if we have any questions about this, or if there's any issues that people have in facing and obtaining that subcontract data or performing those CAPAs as a prime contractor.
I don't see any new questions, Alyssa.
Okay. Awesome. Well, then we can just move on to slide 17. So here we have a bit of a pop quiz. Let's see how it works. But here's an example of a portion of a prime contractor's analysis on a subcontractor's proposed labor rate. So simply the prime contractor's cost analysis simply states we recalculated the average labor rate and consider the labor rate reasonable. Would anybody want to jump in the chat and say if this is adequate or inadequate? Remember, it's a cost analysis. So.
Yep. And the chat is disabled for today's event. But if you wanted to maybe in the
okay,
Q&A.
No problem. Oh, sure. Yeah. Or if not, I can just jump to the answer. On slide 18, we have the answer.
Yep.
And I'm assuming in their heads, everybody was saying inadequate.
We did have some responses that said inadequate, yes.
Okay, great. So slide 19, we can talk about why. and some improvements to consider. So the primes analysis that we saw, their cost analysis that we saw a couple of slides ago, just simply stated that they recalculated the average labor rate. So essentially they performed a math check, and that doesn't necessarily tell us why the proposed labor rate is actually reasonable. We'd also want to consider the sources of the components that go into that labor rate calculation and if those form a reasonable basis for making up that proposed labor rate. Therefore, the prime should also consider the recalculation is fine, so they can still do that. But in addition, we want to make sure that the pool of employees used in the calculation is representative of the function being bid. Consider validating the source of the labor rates to the actual employee payroll records to ensure that the rates tie. Consider comparing the rates to market labor rates, where we're getting that benchmarking to see if they are in line with market rates and reasonable. And finally, the prime should make sure to document all the full scope of what they've done to ensure that that labor rate is reasonable, so that someone coming in and reviewing that analysis would come to the same conclusion that that proposed labor rate is reasonable. And of course, these are just some considerations, and it's not all encompassing for every labor rate estimate, but some suggestions that we would provide to make that cost analysis adequate. If we don't have any questions, we can move on to slide 20. We'll talk about other direct costs. So in addition to direct labor and direct material, other types of expenses under certain circumstances may be specifically identified to a particular contract and proposed as what we call other direct expenses. Now, some of these other direct costs are, for example, special tooling, packaging, and a common one we see is travel if required by if we know that's going to be required by the contract. As with the prior cost elements we discussed, the basis for pricing of ODCs should be included in the proposal. We want to see how you came up with those costs. So for example, proposed travel costs, a basis of estimate for travel costs should include the purpose of the travel, why it's needed to support the contract, the estimated number of trips that are going to be needed to support that contract and those services, and the estimated cost of the travel expenses making up those trips, which contractors should then be able to reasonably support how they came up with those costs within that trip expense. Any questions? If not, we can move on to slide 21, where we'll start our discussion on indirect costs. Now, indirect costs usually make up a significant portion of most proposals. And as with the other cost elements we've discussed this far, an adequate proposal is going to need to include the basis of the proposed costs, so the basis of those proposed indirect expense rates in this case. The contractor should also be including the current year detailed and operating budget and long-range forecast or strategic plan covering the entire period of performance of the procurement. So the operating budget should be at a lower level by department and pool, with expense item details supporting the anticipated contract performance period. The budget should also detail indirect expenses in the proposed rates, and it should show the relationship of the allocation bases to sales projections. So is the contractor factoring in the impact of future known or anticipated awards into the appropriate allocation bases? Likely that G&A base, we'd want to see them factoring in any future awards that they know they're likely going to get for the period of performance of that contract. Support for proposed indirect rates should also include comparisons by year of projected overhead expenses by account to prior years incurred cost amounts if we have those, so we can see the trending based on those historical rates and pool costs and base costs. Out year projections should be supported by the contractor's analysis of the impact on its rates and its long-range forecast and strategic plan. Any questions here? We have a lot more slides on indirect costs and budgetary data, so this isn't the end.
Yeah,
If not, move on to slide 22. Oh, we have some questions?
We do have a question. It kind of goes back to the labor,
Okay.
So it says, just for further clarification, would 1099 workers fall under other direct costs, or should they be listed under labor?
I think it depends on the work that the 1099 employee is doing. If they are, just providing like consulting services, that might go into another direct type of cost. If they are actually a 1099 for an employee that's performing labor to, or engineering services or something in support of the contract that all of their other employees performing that labor are similarly doing, then it would go into direct labor, if that makes sense.
Yep. Okay. And
all right.
Then we have a question about, can you provide some examples of indirect costs?
Oh, sure. So your indirect costs are going to be anything needed to support, rent, for example, your facility rent. So anything needed to support the contract that's not specifically required for that contract. So your indirect expenses are even your salaries of your CEOs are going to be indirect expenses because they are supporting multiple contracts and the overall operation of the business. So our direct expenses are going to be that are specifically required for this one contract or this one proposal being bid. And our indirect expenses are going to be anything that's included in your overheads and your G&As that support the company as a whole, or, specific departments that are working on multiple contracts, if that makes sense. Utilities as another common indirect expense.
Okay, thank
you. Mm-hmm. All right, so slide 22, I believe, is where we left off. And this slide just kind of has the FAR reference, which requires the trend and budgetary data that we just talked about. FAR 15408, Table C 15.2 wants us to show trends and budgetary data to provide the basis for evaluating that reasonableness of those proposed rates. Then we can move on to slide 23, where we'll talk a bit more in detail about budgetary data. So this first bullet here, just straight lining out year rates for future periods with no explanation would not be considered adequate if we're looking at a proposal. We want to see support for those out year rates. So support for out year pools and bases should be made based on reasonable sales forecasts and the contractor's assumptions for any changes, if any, to major cost groupings. So we have variable, semi-variable, and fixed. So as I was kind of mentioning, a fixed indirect cost would likely be rent, unless for some reason, your rent is going to change in the next year or two. Variable or semi-variable might be your utilities, where, they're similar each month, but they do vary a little bit. And then your super variable might be, things like office supplies or trainings where you have them, but they change often. In this last bullet here, small firms with limited budgetary data can use historical data to estimate out year rates. So you might say, okay, last year's rates, our rate for the future year is not going to be that different because we're just supporting this one contract, and this new contract is just going to essentially take the place of the prior contract we were performing for this program, which we're wrapping up. So essentially our rates are likely going to stay the same. That's okay, but the contractor needs to still provide trend data with appropriate explanations to support that the historical costs are the most reasonable estimate for those future rates. Any questions before we move on to slide 24? Okay. So we have some examples of inadequate budgetary data. I kind of mentioned this, but flatlined indirect rates with no support using the same rate each year is not acceptable. If you think your rates aren't going to change, that might be okay for a smaller business. But again, we're going to want to see the thought behind that. Why? The key to supporting indirect rates is really providing that sufficient trend and budgetary data to support the basis for those future indirect rate assumptions. So some examples of the information that could be provided are strategic planning data, which supports your indirect rates basis provided for all years of a proposal's period of performance. When rates are flatlined, again, we want to support this basis by adequately assessing and supporting why those rates are going to remain consistent with historical trends. And you support the basis for the out-year rates using detailed budgets provided for the first few years of the period performance and strategic planning data provided for the remaining years of the period performance. So those are some common ways to support that out-year and that budgetary data and those rate forecasts. Another inadequacy would be, again, no detailed budgetary data provided or projections provided only for the first year of the proposal's period of performance. We, again, need to see the thought process behind those future estimates. All right, if there's no questions, we can move on to slide 25, and Lashaya will take it over from here.
Thanks, Alyssa. So Alyssa just finished talking about some examples of inadequate budgetary data, but why is it important to have adequate, versus inadequate data? So what you see on your screen is, of course, if we have adequate data, it will help with better planning. We can get those audits done in a timely and efficient manner, and you'll also have better estimates for your proposal when you have that good, adequate budgetary data. So the problems with inadequate data, of course, is the audit's going to take longer. It might result in an adverse audit opinion, meaning that we didn't have enough information to effectively review the proposal, and it could also delay the negotiation process, and you won't be able to be awarded because of inadequate budgetary data. So now we'll go through some examples of adequate and versus inadequate budgetary data. So we are, I believe, on slide 26. I know you guys can't get off of mute, but here, if you look at this, the table on the screen, you'll see that they straight line the 22 rates, which is the G&A was 10%. They took that and they straight line it for the 2023, 2024, and 2025, and and moving on. Do you feel that that is adequate or inadequate? And I'll give a couple of seconds for you guys to type it into the chat. Okay, you can go to slide 27. It is actually inadequate because they flatline those indirect rates with no support for using the same rate each year of the. We didn't have any support for those performance periods. So slide 28, which Alyssa already talked about, was that flatline, straight lining out year rates for lack of budgetary data is not acceptable. So some things that they could consider, again, the more information that we have, the better it would be to support the basis. So explain why, if they were going to straight line those years, what didn't change? Why is this fixed? Why is this a fixed rate? So putting more explanation in there of why the rate will not change would be could help with justification. Providing any details on, like, okay, what are some upcoming changes that or changes that we don't think are coming. So all these things will help improve when you're doing your budgetary estimates. Are there any questions on adequate budgetary data before I move on to the next slide? Okay, we are on slide 29, adequate cost or pricing data. So we talked about budgetary data. Now we're going to talk about adequate cost or pricing. So with adequate cost or pricing data, it has to be factual and verifiable. Now, it can include some data informing a basis of your judgment, but again, we want to make sure that there is some source documentation. What did you use to form your judgment? Usually when you respond to an inquiry related to this, it needs to be a verifiable source document. So be prepared to discuss and support your basis of estimate and provide details for that judgment as well. So for example, you're stating that the rate will not change. Okay, the rate will not change because of, and show something to support why that rate is not going to change. Okay, the labor rate is going to increase. Okay, what is it increasing to? Is it because of like high turnover? Is it because of the market condition? What are the things that you are utilizing to support your basis of estimate? Make sure you be able to provide that. Next slide, slide 30. Okay, so what exactly is cost or pricing data, and why is it needed? Why is it needed? So FAR 2.101, cost of pricing data, says that it's all the facts that exist up to that time of the agreement that would be a part of your cost of pricing data. What you need to know about some things, again, and then there's also the FAR 15.406-2 says that cost of pricing data, it requires a certification that the data is current, accurate, and complete. And there's also a threshold. So there's a $2 million threshold that should be used when the anticipated prime contract is awarded after 2018. So everybody's at this new threshold of the $2 million threshold to determine whether certified cost of pricing data is needed. Now, there are some exceptions to cost of pricing data that we're going to discuss later on in the next presentation, but there are some exceptions, which it could include the adequate price competition, which Alyssa talked about earlier. There's also, it could be, you don't need certified cost of pricing data when those prices are set by law or regulation. You wouldn't need certified cost of pricing data for that. It meets the definition of commercial item. You wouldn't need it for that. There's a waiver, or it's a commercial contract that's modified and meets the requirements within FAR 15.431C. But again, these are cost of pricing data is required by FAR for above certain thresholds. Okay. Any questions about cost of pricing data before I jump into some examples of cost of pricing data? Okay, so we are on slide 31. And we talked about some of these, and when some of the questions came up, I know that I mentioned like vendor quotations as an example of something that you can look at for when you're trying to do your price proposals. So these are not all inclusive of all the examples of cost of pricing data, but vendor quotations can be used, purchase orders, make or buy decisions. So make or buy, if you're not familiar with make or buy, it's pretty much when you're trying to determine whether it would be better to choose between manufacturing a product in-house or purchasing it from an external supplier. So that is a decision. That's what we call it, our make or buy decision. So there is firms use that to have like a competitive advantage. Also, some other examples is your accounting records could be used for cost of pricing data. Information on the production methods, and then lastly, data supporting projections of your business prospects. Any questions so far?
We do have a question.
Okay.
Just to clarify, whether contracts under 2 million would potentially be audited, or just those over 2 million?
So that's for certified. So the certified cost of pricing data there's a 2 million threshold. You still need to have pricing, data for any price proposal. But as far as it to be certified, which that's another topic that we're going to talk about, like certified cost of pricing data and just straight cost of pricing data. But all cost of pricing data, it is any information that exists prior to the time of negotiation. We're talking about that 2 million is for the certification, and that's pretty much a part. It has to be a part of your proposal where you're signing off saying yes, everything in this is current, accurate, and complete. Regardless if you have that certificate or not, when we're trying to determine fair and reasonable, we're going to see if you have some cost of pricing data to support your proposal. Alyssa, did you have anything you wanted to add?
Oh, yeah. I'll just add that in regards to an actual audit, we will, I know we keep saying this, we'll talk a bit more in the next slides about the field pricing assistance related to the size of the proposals and stuff, but we don't typically get involved in auditing proposals unless they are above 10 million firm fixed price or 100 million cost type. And that, you know, that doesn't correlate to that $2 million cost or pricing data threshold. That's just the DFARS threshold for contracting officers to reach out and request actual audits. Now, in the stuff under those thresholds, either we can or DCMA still might be, you know, providing some sort of field pricing assistance to the contracting officer to determine that fair and reasonable price, but not necessarily performing an audit. And we'll talk more about the difference between an audit and, you know, just other type of field pricing assistance or price analysis type things that we help out with in the next slide.
Thank you.
Mm-hmm.
Okay, are there any more? I didn't want to move on if there were more questions.
Nope, you're good to go.
Okay. So I believe we are on slide 32. And this is just going back on like what is the benefits of having adequate data versus inadequate cost of pricing data. So again, we talked about this, some of the adequacy, same thing as budgetary, is that of course the better the adequate, the more adequate information you have, the more timely and effective audit would be. But also with cost of pricing data is if you have more adequate and current data, current information, it actually helps with follow-on pricing. You get better estimates. And same thing as, like I said before, with the budgetary, for inadequate, it's going to be a longer audit because the more information that we need is going to have to be keep on reaching out and get more clarification. There could also be a potential for defective pricing, which is the truth in negotiations. We do an audit to see that if what was proposed was it a defective proposal. So then we will audit what the information is and what it should have been. Then another inadequacy could be issue with inadequate could be like inaccurate follow-on pricing. But an adequate accounting system would definitely help to capture some of those proper costs to estimate for follow-on acquisition. So it's great to have an adequate accounting system. Okay, next let's go through an example like we did before with the budgetary data, but now we're going to talk about the cost of pricing data. So we are on slide 33. So in this example, there is in this price proposal, which is dated July 2021, there is a particular unit, and it's estimated at $2,000 per unit. Now, what was this based off of? Okay, great. It was based off of purchase order number 124, and that was dated July 6, 2015. Do you feel that this this is adequate cost of pricing data, or is inadequate cost of pricing data? And I'll give a couple of minutes for you guys to post in the chat whether you think it's adequate or inadequate. Okay, next slide, slide 34. And hopefully you all got this, that it is inadequate. So, but why is it inadequate? So on slide 35. So although they did have a purchase order, which is verifiable, like as we said with cost of pricing data, it needs to be something that is factual and verifiable. It needs to be some type of supporting documentation that is utilized to come up with this. So they used a purchase order, which was great. But if you look at that example, that purchase order was for 2015. That was July 6, 2015. Now it's July 2021. So there is a large gap from that purchase order to now. So things, escalation could have happened. There could have been some, new, some other things that have caused that price to change. So even though they did use a purchase order, we have to go back and look at that time frame. So things that could be considered to help is, of course, getting that current competitive quote. That quote was years ago. Like I said before, market pricing. What are some of the current prices now? Then if they were to utilize that purchase order back in 2015, did they adjust it? Did they adjust it for the current trends and quantities? Again, another consideration is make or buy analysis. Oh, did they have any inventory on hand that they didn't really need to buy so many units? And then also the cost of pricing data if it's over a threshold. Those are some of the things to consider for that particular example and for when you're looking at purchase orders. Any questions so far before moving on to slide 36?
Nope, you're good.
Okay, awesome. So slide 36 is cost or pricing data consideration. So we're going to go for these for labor, and then the next slide would be like indirect labor. And these are, again, they're not all encompassing. These are just some considerations to look to when you're using cost or pricing data. For labor, historical data. Now, again, with historical data, just like they use that vendor quotation, that was a historical purchase order, but it was so outdated. So you have to make sure when you're utilizing historical data that make sure if it's useful or not useful. So make sure that it's actually helpful for your analysis. Again, another consideration is the basis for your escalation factors. There are market information out there like global insights. There are other things that you could utilize to determine what would be the particular escalation for that labor category, that labor rate. There's also survey data. Another thing that you want to consider is the turnover. Is that particular labor, have you had constant turnover in that, which caused, an increase in that labor rate because it's so high demand for that maybe particular job category. Also, that goes also with compensation issues. Is that this is a hard field to get. It's specialized, so you have to market it a little bit different to get people within that position. Again, improvement curves. Maybe like this was at first when you first started the task, you needed 100 employees, but based off of some different technological advancements, or now AI is the whole thing, so people can utilize a lot of AI functions that don't require as much. So because of this, you don't need as many that you need before. So these are just some things to consider when you are for labor for your proposals. Slide 37, indirect rates. Again, you have internal budgets. What have been, if you're looking at the rates, internal rate documents, you can utilize that. Again, another basis of escalation factors. Changes in the head count. You can have some ongoing, you can utilize historical rates or previous forecasts based off of your documents, your sales team, your sales forecast. You can utilize that. Any other accounting issues that may impact your rate, you want to make sure that you're using all of these things to come up with your indirect rates. And again, all of this is not encompassing. There could be, the main thing here is to be able to have a basis for what you put here. So these are just some examples for your basis for your rates. Okay, slide 38. So we talked about, I think I was talking about historical rates for budgetary and also for the cost of pricing data. So with the historical data, you want to make sure that you consider several items. You want to make sure for learning efficiencies, are the same resources that were needed prior, do you still need those resources? And I touched on that before. Maybe that at first it was a new project, so this is your company's first time doing it, so you had to hire more people, but based off like performance and working on this, you notice that you don't need the same manpower, you don't need the same equipment, you already have something, so make sure those resources need to be based off of, you might need to change those based off of some of the learning efficiencies that were developed later on. Prior non-recurring costs. So if you're utilizing historical data, make sure that those things are not, that was in that proposal, those are not things that are going to be needed throughout the entire time. It could have just been a one line, like an initial setup fee, or it could have been just a purchase of the, new office building for one time. So you want to make sure that you're looking at these non-recurring costs and they're not included for each of those years within your proposal. Now, escalating diminishing costs. This refers to the increase in costs or decrease in costs over time due to factors such as, of course, inflation, the market conditions, and rising resource prices. So you want to make sure that you're looking at that information as well. If you're looking at historical, make sure that you are adjusting it for these things, for all of these things that are listed. And then the last thing is the representative, non-representative aspects. So that is examining like the past data and trends, or it could also, this definitely helps with the organization gaining valuable insights because it helps make more accurate cost estimations based off of future projections. For future projections. So here you want to make sure that you're reviewing those past cost estimates against, actuals. You're refining your estimation process over time. And when you are using historical data for your planning and decision making, that you are comparing it and, again, just making sure that you're updating to what it is currently. So these are, again, not all encompassing, but these are just some estimates that should be considered for historical data. Do I have any questions on historical data and any of these considerations that should be made for historical data?
Not as of yet.
Okay. All right, so now I am on slide 39, unallowable costs. So with unallowable costs, FAR 31.201-2 governs that. There are several unallowable costs within FAR. There's some within FAR 31.215, but particularly 201-2, it talks about the reasonableness, it talks about allocability, and it talks about terms of the contract. So when we're reviewing costs in a proposal, we want to make sure that no unallowable costs are included. So we will go through and make sure that it's in guidelines with FAR. So this FAR is definitely really great to make sure that you don't have any unallowable costs within there. And there are some that are particularly stated out loud, like these are expressly unallowable. And then there's some that, it really just depends on if you have all the supporting documentation that's needed for it to be reasonable or allowable. Okay. I'm not going to go through all of these, but it's within, we put the FAR reference there so that you can go and look in the FAR for the different ones that's stated. Okay, we're on slide 40 now. So some of the common deficiencies that we are finding when we're auditing these proposals is the main thing, inadequate cost of pricing data. They are submitting the proposals, but it's not enough information there to support that this costs the data. Again, lack of inadequate budgetary data, and then the failure to perform subcontract analysis. Sometimes, even though if you're proposing as a prime, you still need to have information for your subcontractor as well, because we're reviewing the proposal in totality. So make sure that you guys are getting as much adequate information. You are providing your basis of estimates. You are including supporting documentation. You are responding to the inquiries to make sure that, again, when it's adequate, the audit is done faster, more quickly. You can get your the negotiation done better as well. So make sure that you are providing as adequate as possible information within your proposal. And then next slide is 41. So just to wrap up, the pricing proposal should include the following. It should have that cost of pricing data, which supports the proposed cost. It should have your budgetary data for the entire period of performance, or support for the proposed indirect rates, and then that subcontract analysis. And as you can see, those top three things that we put up there in the wrap-up were the main top three deficiencies that we had. So just the overall wrap-up to make sure that you have that information and that there is make sure you're utilizing that checklist to make sure that your proposal is in line with it as well. And on the next slide, we have some resources, slide 42. There's the DFARS, the FAR, and also our website, DCAA, will give you information on, of course, what a proposal adequacy, it has, the DFARS will have a proposal adequacy checklist. Our site, it has some information for contractors that will help, you know, when you guys are putting all the information together, you utilize this actual presentation as a tool to make sure that you are supporting your costs as well. All right, and then slide 43. Oh no, I missed one. Okay, sorry, I was on the wrong thing. So 42, that was the different resources that we have available to help with you providing a price proposal, and then slide 43. Now, both me and Alyssa, we are not specifically on the small business team. However, we, you know, help where we can. But the small business, they would love to hear about any experiences, your recent experiences, how they can do better at providing these types of training. So there is a survey that is on slide 43. If you could do that, say like, hey, what you liked about this presentation, what could be improved, that we utilize this to make sure that our presentations are set up to make sure that it's meeting your needs to get you what you need to, you know, get those proposals out there and, you know, get those awards. So please go here. Even if you thought the presentation was great, you can put that there as well. We love to hear your feedback. Next slide is 44. So any questions before we take a break and then we come back for the next part?
We don't have any questions at this time. Did you want to take a quick 5-minute break, or do you want to go ahead and continue on with the presentations?
We can, Alyssa, well, I know I'm about to talk in a second, but it's up to the people. Do you guys,
I'm
want to take a break?
To do whatever.
Is there anybody posting in, did they want to take a break, anything like that?
We generally take a 5-minute break, but that's certainly up to you. If that would work, we could come back right around 2:20, well, 3:23 Eastern, 2:23 Central.
That's fine. We can do that.
And would
Okay.
that allow you enough time to go through the remainder of the slides?
Yeah, because I feel like the first couple of ones are kind of like repetitive, Alyssa, so I can like kind of go through mine pretty fast.
Okay, yeah. We can adjust as needed.
All right, so 3:23.
All right, so 5 minutes. Okay.
Yep. We'll see you in a few minutes. Thank you.
Thank you.
Welcome back, everyone. Ms. Alyssa Triber and Ms. Shia Cooper will be joining us momentarily. Thank you for your patience.
Hello, I'm checking in.
Everybody, thanks. Yeah, me too. Welcome back, everybody, for the second part. We're halfway there, and a lot of this information is kind of repetitive, like we have talked about, especially when we're going to start talking about cost and pricing data. So some things are repetitive, so the ones that we're going to just go ahead and skim through that part. So we are on slide 46, putting the pieces together, an overview of contract proposal pricing. Next slide, the objectives. So the key topics, we're going to define the key terms. So we're going to learn the definition of those key terms used in contract pricing. We're going to understand how these terms are used in the pricing process and how they may impact your proposal. We're going to talk about truth in negotiations. We're going to identify the requirements of the truth in negotiations, include the need for current, accurate, and complete disclosure of cost and pricing data. We're going to talk about the major roles and responsibilities. So understand the responsibility of the contracting officer and DCA, including their role in evaluating the proposal, establishing fair and reasonable pricing, negotiating contracts, and then learn how to effectively communicate with each player to ensure the proposal is properly evaluated. Then we're going to talk about cost versus price analysis. We're going to define cost versus price analysis and understand when the contractors need to perform it. We're going to learn how to conduct a cost analysis and how to use the results to inform your pricing strategy. And then lastly, certifying your proposal package. Know when you need to certify your proposal package and when you are exempt from certifying. Understand the certification process and how to ensure that your proposal is properly certified. So the first thing, slide 48, is the key terms used in contract pricing. We are on slide 49, cost or pricing data, which we talked about in the first part. We stated that it's factual, it's not judgmental, and it's verifiable. It includes data forming the basis for your judgment. It contributes to the soundness of the estimates and the future costs. And again, it's all those facts as of the date of the price agreement or an earlier date agreed upon between the parties. Next slide, slide 50. Okay, so cost or pricing data. Now, what's certified cost or pricing data? So this is a type of cost or pricing data, which, again, we talked about before, and someone had a great question asking about audits and that threshold. So certified is, again, it is a certification. It will state whether that cost or pricing data is accurate, complete, and as a certain date before the contract award. And it's required for any proposal package over $2 million. So if you have a proposal package that's over $2 million, then certified cost of pricing data is required. Any questions so far? Okay, moving right along to 51. And I'm sorry, I forgot you guys can't talk, so I will wait a second to see. At any time, the moderators, if you guys see a question, you can stop us and just go ahead and ask it. You don't have to wait for us to pause. So we talked about cost of pricing data. The first one was the certified cost of pricing data. The other one is data other than certified cost of pricing data. That's slide 51. So this includes factual and verifiable cost of pricing data, but the difference between this and certified cost of pricing data is, one, it doesn't have any certification. It's without the certification. It also can include more judgmental information, this information is utilized to help determine the fair and reasonable price or to determine cost realism. So I said fair and reasonable. That's going to be another term you guys hear on slide 52. So what is fair and reasonable price? That is the price considered to be fair to both parties. It is what is considered a prudent and competent buyer will be willing to pay. And it can depend on various factors. So, of course, the market, economic conditions, quality, competition, and timeliness of the contract performance. So that's fair and reasonable. And then also the FAR helps, and that the one that I talked about the last before we went on break, that FAR 31.201-2, it talks about reasonableness and that as well. It might actually be FAR 201 points. It might be 3, but I can't remember the exact one. But we talked about it in the last one, and it definitely helps with determining what's considered reasonable. All right, we are on slide 53. So we just went over those key terms. Now let's talk about the Truth in Negotiations Act and what does that mean for you. So now we are on slide 54. So what is Truth in Negotiations Act? It is a law that requires contractors to provide that accurate cost and pricing data when submitting proposal packages. So you are required by law to provide accurate cost and pricing data, okay? So who does it apply to? It applies to any contractor that is submitting proposal packages that is subject to negotiation. So, okay, where does this, come into place? Well, within your pricing package, we talked about a certification. You need to have that certification in there that's saying that your package is current, accurate, and complete. When is that $2 million threshold? So when it's that $2 million threshold, you need to have that certification within your package. And so, but why? Why do we need all of this? It helps ensure that contractors and the government are both on equal footing for source negotiations. And also provides the government with a price reduction remedy if a contractor fails to comply, and includes some provisions for interest and penalties. So we'll talk about truth in negotiations, TINA, non-compliances later. So this goes into a play when you are not, abiding by this law and not submitting certified cost of pricing data or adequate information. Now the government has a foot to stand on to, either change some things or, we'll talk about that a little bit later though. Slide 55. So we talked about what Truth in Negotiations Act is. So hey, there has to be some exemptions, and there are. And we talked about this in the prior, the first part of this presentation. Those exemptions are adequate price competition, prices set by law and regulation, commercial products, a waiver, modifications of a contract or a subcontractor for that commercial. These are some exemptions. So say you have a proposal that is above that threshold, that $2 million, right? You don't need to have that certified cost of pricing data if that proposal is for a commercial product. You don't need that certified cost of pricing data. So again, there are some exemptions to the Truth in Negotiations Act. We're going to go ahead and go to the next slide, which is slide 56, and we're going to talk about that certificate of current cost of pricing data. And this is just the FAR that governs that. It's FAR 15.406-2 that requires the contractors to certify to the best of their knowledge. And that date is when the negotiations were concluded. So there's going to be a specific date that you have to certify, and that is when negotiations were concluded and a pricing agreement reached, or a date that's close as practicable. And this is this certificate of current cost of pricing data. We usually just refer to it as, I don't know, if Alyssa, do you call it COPD or do you say COPD?
I usually say COPD.
Yeah. Okay, COPD.
Yeah. But maybe people call it.
COP, yeah. Hey, you got that certificate, COPS? No, I'm just joking. So COPD. Now we are on slide 57. We're going to continue talking about the requirements for certified COPD. So it's required for major cost elements. It has to be submitted by the contractor, and then it's analyzed for the government. So if materials or services, direct labor, indirect costs, other costs, royalties, and facilities capital costs of money, we call it FICOM. Now, remember that certified cost of pricing data must be factual data. Estimated or proposed amounts are not going to be considered cost or pricing data. However, any proposal references to supporting factual data is considered cost or pricing data and must be what? Must be certified, okay? So we're talking about, we're still talking about this certification. So on slide 58, when is certification required? So we have some amounts up here. So SAT is the simplified acquisition threshold. So if the cost is $250,000 or below, you never need to have any type of certified cost, or you don't need, it's not required to have certified cost or pricing data. Now, when it's between that simplified acquisition threshold of 250 and the TINA threshold of 2 million, you may. That's why, you know, Alyssa, we kept on saying, well, it just depends. So that little window, the 250, not little, that's a nice little gap. The 250,000 and the 2 million, you may need certification, but it will need to be needs to have an approval to get that. And then anything above that, it's required. There are no exceptions. Well, we already know the exceptions are if it's adequate cost of pricing data, if it's, adequate price competition, if it's prices set by law and regulation. That's when you don't really need those, need it for that. But anything else, you need it. Okay, any questions on when you need that certification? Okay.
Nope.
Well, if I don't hear anything, we're going to go to, go ahead.
No questions at this time.
Okay, perfect. So now we are on slide 59. So we talked about earlier when we're talking about that, you know, truth in negotiations is required by law, and it helps. Why it's needed is because it helps the contractors and the government be on equal footing. So now we're coming into play to where, okay, so what are the ramifications? What happens when you're not in compliance? So when you're non-compliant. So this is when DCAA will perform we call it our 10 audits, a truth in negotiation audit, and that will determine if the negotiated contract price was increased by a significant amount because the contractor did not submit or disclose that accurate, complete, and current cost of pricing data. So when this happens, there are ramifications from that. If it's found to be defective, the government can be entitled to a price adjustment, including profit. So that's why you need to make sure that you are following the law and making sure the information is adequate because, again, there are ramifications for, we call it defective cost of pricing data because it's not adequate, so we consider it to be defective. So the next slide, slide 60. So what is the contracting officer's role in the contract pricing process? We're on slide 16. So they have three basic principles of contract pricing for contract officers. They need to, which is under FAR 15.402, to purchase supplies and services from responsible sources at fair and reasonable pricing, to price each contract separately and independently, and then exclude contingencies. So in order to make sure that they're purchasing supplies and services from a responsible source at fair and reasonable pricing, they're going to be looking at these proposals. They're going to be evaluating the reasonableness of that. They're going to be looking at the FAR and seeing if your cost that you propose meets, the requirements and also are reasonable. And they're going to look at each of the items separately to make sure that they're reasonable as well. So these are just some of the principles that they're using to contract the price. Okay, we are on slide 62. So what is considered fair and reasonable for the buyer? Again, when it comes to these proposals, you're going to hear fair and reasonable a lot. So we utilize pricing analysis to determine what a fair and reasonable price is. So the total allowable cost of providing the contract deliverable that would have been incurred by a well-managed, responsible firm using reasonable, efficient, and economical methods of performance is what they consider fair and reasonable for the buyer. And also reasonable profit. So again, we utilize price analysis to determine what fair and reasonable is. And I believe like later on, she will go through some of the analysis. Yes, Alyssa will talk about some of the analysis that we utilize to determine fair and reasonable a little bit later. So now we are on slide 63, which is pricing contracts. So everything that we do, it's governed by, we utilize the regulations, which is FAR. And FAR 15.402, it requires that the contracting officers to price each contract separately and not independently. So we're going to use those, they will consider losses or profits realized or anticipated under other contracts. They're going to use proposed price reductions under other contracts as an evaluation factor. They're going to utilize all of these different things to get that price contract. Another thing so I said that they utilize pricing. It was 3 things that the contracting officer does: is the pricing of the contracts, and also is the contingencies. So on the next slide, which is slide 64, we're going to talk about those exclusions of contingencies.
We do have a couple of
Sorry.
Yep, we do have a couple of questions if that's okay. So we do have a question that asks, what is considered reasonable profit percentage?
Ooh, I feel like we get asked this question about profit all the time now, and I will say that it's not in DCAA's wheelhouse. We don't evaluate profit. So that's usually something that the contracting officers utilize. I think they might look at, and again, I'm not a contracting officer, so they'll have their own thing, but sometimes they might look at what others are doing in the same industry, in the same, so if you're doing, say, construction, they might look at different constructions to see what their profit analysis is to come up with like an average, but that's not, in DCAA does not look at profit. Alyssa, did you want to add anything else?
No, yeah, I agree. We aren't typically involved in the profit portion, for just a general percentage. I see a lot on like cost type. I think cost plus fixed fee. I think you can't exceed 10% of the contractor's estimated costs, excluding the fee. I don't know that I've seen it much higher than that, but I think there are certain circumstances where it might go higher than that. 10%. I want to throw out 7% as a common one I see. But again, Lashai is correct in that it's mostly the contracting officer that deals with the appropriate profit percentage to use.
Okay. The next question is, are subcontractors required to have certified cost and pricing data, or does that simply fall under the prime contractor?
So the prime, when they submit their, within their proposal, they need to have the information available. So whatever, if they're utilizing the subcontractor's cost, they need to have information to show that the subcontractor's cost is cost, what's the word that I'm trying to utilize? It's up to the prime. So like whoever is submitting the proposal, the prime is responsible for having that information. That's correct, right, Alyssa?
Yeah, the prime will need to include it, but I believe if the subcontractor's proposal is over that $2 million threshold and doesn't meet the any exceptions, then they are required to have that certified cost or pricing data.
Okay.
My understanding.
And then we also have a question if there are any spreadsheets based on industry. And I guess I'm not aware of any. Are you aware of any spreadsheets based on industry with regards?
As far as what though?
In my
industry, as far as like rates or labor, like what?
Yeah, it doesn't really specify, but I'm guessing like cost and pricing data, but I don't know. Oh, in reference to profit, they just clarified. So I think we already kind of answered that. Yeah.
Yeah. So I think FAR 15404-4 covers profit in more detail. So if you want to look there, it gives, I just pulled it up. So it's got a lot of information as to the different types of contracts and the thought behind profit for each.
Yep. All right. Those are all the questions for now. Thank you.
And then before I hand the baton over to Lissa to talk about DCA's role in the pricing proposal process, which we can definitely have more responses on because that's our wheelhouse, is the last thing that the contracting officer does, they have exclusions of contingencies. So FAR 15.402, it prohibits the contracting officers from including any amounts for a specified contingency to the extent the contract provides for a price adjustment. And then ways to mitigate the risk is to use appropriate contract types. For example, fixed price with the economic price adjustments, meaning that like for a fixed price contract, if you use one for economic price adjustments, you can adjust it based off of different, things that are going on when confronted by volatile commodity prices or market conditions. So that's a good way to mitigate some of those contingencies that are prohibited from the contract officer. Okay, so now I'm going to pass the baton over to Alyssa, and she will continue on to explain what DCA's role is in the pricing proposal process. We are on slide 65.
All righty, thank you, Ashaya. Baton passed. Yep, slide 65, DCA's role in the pricing proposal process, and we can move on to slide 66, where we'll get into that. So when a contracting officer cannot establish the proposed costs and prices are fair and reasonable, they should request field pricing assistance. Note that field pricing assistance, I kind of touched on this earlier as a foreshadowing, but field pricing assistance may include coordination with DCAA, DCMA, and specific agency pricing teams. This doesn't necessarily mean a DCAA audit. Field pricing assistance can take many forms. However, per DFARS PGI 215-404-2C states that contracting officers should consider requesting audit assistance from DCAA for fixed price proposals exceeding 10 million and cost type proposals exceeding 100 million. So that's where those thresholds that I was mentioning earlier come from, that DFARS. That's not to say we won't audit things under the threshold. There are certain circumstances, and DFARS does provide exceptions, but it's usually if there needs to be a specific area of concern or risk area from the contracting officer for us to go in and audit proposals at thresholds lower than 10 million and 100 million. And when we're talking about field pricing assistance, and I'll get more into this in the following slides, but that doesn't mean just audit. So we still can provide, we like to call them advisory services or other information relating to those proposals under the auditable thresholds. So slide 67. So information to help contracting officers determine commerciality and price reasonableness can be something that we look at or help with during field pricing assistance. So in this current climate, especially, it's become increasingly more important to scrutinize for commerciality. That's a directive that's coming down from, way up above, that they want more commerciality being used in our procurement. So because commerciality helps ensure that price reasonableness. So additionally, whether or not an item is commercial or not, a price analysis still must be performed. So whether it's commercial or not, that price analysis to ensure that overall reasonable price still has to be performed. So some ways that contracting officers can assess reasonableness of those prices are by verifying sales history to source documents, identifying special terms and conditions, identifying customarily granted or offered discounts for the item. We want to see that those contracts that you're including items that are discounted. We want to see those discounts included in the proposal. Verifying the item to an existing catalog or price. Verifying historical data for an item previously not determined commercial that the offer is now trying to qualify as a commercial item. Identifying general market conditions, and then determinations of commerciality and price reasonableness. So DCMA has a whole commerciality team, and they will go in and they can perform these commerciality assessments for the contracting officer and decide whether these items are commercial based on some of these bullet points here. So that's a resource that we often recommend. DCAA, we don't so much get involved in the determination of commerciality, but we can provide some background data to help the contracting officers make that determination of commerciality. Any questions before moving on to 68?
We do have a quick question. So
Okay.
The question is whether the audits are triggered with a single contract of 10 million or above, or if it's if added sales. So let's say they have multiple sales that then add up to 10 million for the same products. Would it also trigger an audit?
No, it's looked at based on the specific pricing proposal. So it's a case-by-case basis. And it's ultimately up to the contracting officer, because as we kind of saw in that DFARS, it just says the exact wording is that contracting officers should consider requesting audit assistance. So really it's up to them to determine if they want to come to us and request an audit, and they're going to do that on a case-by-case basis. So, you know, they might have one procurement or one proposal that's a 50 million firm fixed price, and they decide to come to DCAA, and then they have a follow-on proposal for that same program the next year, and they feel they have enough information to justify not coming to DCAA. So that it kind of varies based on the circumstances, but those are the thresholds relating to a single pricing action.
Okay, thank you.
All right, so slide 68, intended results of field pricing assistance. So when we talk about field pricing assistance, what exactly does that mean? Like I mentioned earlier, it can range from providing information that we have on file in our historical, what we call permanent files that we keep on each contractor that we've had any sort of audits or advisory services we performed. So maybe like historical indirect rates or information relating to system adequacies for those business systems. You know, that could be field pricing assistance, just providing that information to the contracting officer, saying, here you go, use it as you see fit to make your determination of that fair and reasonable price. Another form of field pricing assistance is that detailed audit, where we can go in and we can audit the proposal as a whole and audit in all of the cost elements, or we can tailor it, and maybe the contracting officer just has a concern related to direct material. So we might just go in and audit direct material. So it really can range, that field of pricing assistance can range based on the contracting officer's needs. But here are some more examples. It can be technical audit special reports associated with cost elements of a proposal, including subcontracts, information on related pricing practices in history, information to help contracting officers determine commerciality and price reasonableness. We kind of discussed that already, and information relative to the business systems, technical production, or other capabilities of a contractor. Any questions? We can move on to slide 69, which is where we'll talk about our audit for compliance. Oh, yeah. Great.
We do have a question, and this is for a client or a company that's being required by the prime to provide forecast pricing for a 5-year contract. They're unsure how to do this, especially during this time of unknown tariffs. Are there any recommendations?
Yeah, I'm assuming this is the overall pricing, so maybe for services or materials, and also including labor. You know, I would recommend doing the best that you can within the current environment and the history that you have, and then discussing, like we kind of talked about, those EPA clauses with your command, because they're getting a lot of that from the contractors now. Like, look, this is what we have based on the data that we have readily available, but we're also seeing, you know, a 20% increase in aluminum, and I just totally made up those numbers. But so we want to factor that in. But then, you know, these tariffs if we're talking tariffs, they're changing month by month, it seems. So maybe that 20% isn't going to be accurate next month. So discuss these uncertainties with your prime and the contracting officer, and discuss that use of that economic price adjustment clause because, you know, I don't know what this person uses or this business uses for escalation. Oftentimes, we, or DCA here, we use Global Insight, or now it's IHS Market or S&P Global. And that's not necessarily capturing all the changes that are going on right now. And when I reviewed that recently, it did say that, you know, the tariff should be considered more of like a one-time impact to that price. And then apply escalation as, you know, as normal going forward. But again, I would fall back on those economic price adjustment clauses. That's really where it's going to be, where then in the future you have that option to go in and say, hey, these prices came in a lot higher than we thought they would due to economic uncertainty, so we want to adjust.
Yeah, sounds great. Thank you.
So DCA's audit for compliance, we have our proposal adequacy checklist here that we went in depth over in the last slide deck. So again, prior to performing our proposal audits, we're going to use that checklist to determine the adequacy of the proposal. And DFARS, of course, we talked about this, but states that when certified cost or pricing data is required, the offer shall complete that proposal adequacy checklist. And that's really going to also help to streamline the process. So if this is an auditable proposal, like I said, the first thing that DCA is going to go in and do is perform that adequacy checklist. So if it has been done by the contractor and reviewed by the contracting officer, that's really going to help to streamline our review of things. If we come in, we're like, hey, we don't see this. And they're like, well, look here on page, 22 of the cost volume is where we said it is. So look there, auditor. So it'll help streamline that process as well. The audit criteria that we audit to are FAR 15, contracting by negotiation, FAR Part 31, which is where we're going to look and test for allowability, allocability, and reasonableness. DFARS 215, defense supplement, DFARS 231, defense supplement, contractor cost principles and procedures, cost accounting standards, if applicable. I know a lot of smaller businesses are not fully cost covered. And the audit program we use to evaluate compliance is linked here. So that's always also a good tool to familiarize yourself with, because you can see the actual audit steps that we're going to go in and perform should we be requested to do an audit. Any questions? All right, so slide 70. Did we have a question?
We do. I might just hold it till the end of the presentation.
Okay. Okay, sure. Yeah, I know we're running up on time. So what is cost versus price analysis, and when do contractors need to conduct it? So 71. Cost analysis is performed to assess the reasonableness of each cost element proposed. So your direct labor, materials, overhead, profit. It aims to determine if those individual cost elements are reasonable and allowable, and it is performed when a certified proposal package of $2 million or more, as LaShai discussed earlier, is required. And when required, the cost analysis is going to be used in conjunction with the price analysis, and we'll talk about how that works in determining the fair and reasonable pricing. On the other hand, a price analysis looks at the total price offered by the contractor and compares it to other prices for similar items. So prices paid for the same or similar items and services in the past, prices offered by other potential contractors. So that's where we see that competition, market prices for similar items or prices, like your commercial items, or independent government estimates. And price analyses are performed on proposal packages regardless of the dollar value, as I mentioned. So I kind of like to think of it this way. Cost analysis is like examining the ingredients of a dish to see if they're fresh and priced correctly, whereas a price analysis is like comparing the price of your entire dish to what other restaurants charge for similar dishes. You kind of need both to see if you're getting a good value. So even if you conduct a thorough cost analysis, you're always going to need to perform that price analysis to determine the overall fair and reasonableness of the price. Move on to slide 72. Here's just another example, kind of like I mentioned with those ingredients in the dish you're ordering at a restaurant. But this one is looking, here we have our cost analysis on this side with the labor, material, G&A, total cost. So you're looking at each cost element to see if that cost is reasonable and what adds up to that cost is reasonable. Versus a price analysis, you're just kind of looking, you know, they have the comparison here, Hyundai versus Honda, and what is the difference in the overall price? And it, you know, is it worth it to go for a Honda versus a Hyundai? You know, we kind of got to make that judgment. Slide 73. Or feel free to stop me if you have questions. I'm just trying to get through in the essence of time. So here's another slide to reiterate the purpose of the price analysis. Essentially, when performing a price analysis, we are concerned about that total bottom line price, or alternatively unit price. And the price analysis is always going to involve some kind of comparison to determine that that proposed price is fair and reasonable. So on slide 74, we do have some price analysis techniques, and these are outlined in FAR. And so I'll just kind of briefly go through these, but you can compare prices proposed by offers. Again, that's assuming a competitive environment. Compare proposed prices to price history for the same or similar items. Prior price used must have a valid basis and should be adjusted based on the terms or market or economic factors. The use of parametric estimating methods. So for example, we can use techniques like regression analysis to tell us if historical data is accurate and makes sense to use to predict the cost of future amounts being proposed. We can compare catalog and published price lists where applicable, compared to those independent government cost estimates, and compare to market prices. All right, any questions on price analysis techniques? And we can move on to our cost analysis. Oh, do we have a question?
Not at this time.
Okay, slide 75. So as we discussed a couple slides ago, cost analysis must be performed when it is necessary to examine the individual cost elements of a proposal. So for example, labor hours or material prices to determine that fair and reasonable price. And when is that required? Again, when certified data are required. So here we have an example of various cost elements that we may be looking at when performing a cost element. We've got your material, the overhead, direct engineering labor, overhead rate. So this might be, you know, how you would see a cost analysis structured. You're going to look at each of those elements. As a reminder, the cost analysis are required on those actions requiring that certified cost or pricing data over 2 million. So let's look on the next slide, 76, at cost analysis technique. So you can compare proposed cost elements to prior actuals for the same product or program, or cost elements for the same or similar work. You can compare other cost estimates, such as independent government cost estimates, where the government goes in and they, you know, gather all the information that they have and see if they come up with what they think the price should be, and then they'll compare it to, you know, what cost analysis was done by the prime for a subcontractor, for instance, and or compare forecasts of the planned expenditures. So that's where, you know, those budgetary data and those long-term forecasts, strategic plans all comes in to play. So slide 77. Some other analysis and techniques that we might be performing either within our audits or as advisory services. So the first one we have here is a cost realism analysis. So are the proposed cost elements realistic for the work performed? Do they reflect a clear understanding of the requirements? And are they consistent with elements of the offer's technical proposal? So we typically see cost realism being used when in a competitive environment, when there might be risk of an offer underbidding to get the award. So we want to make sure that those costs are realistically reflecting what the contractor can actually perform and do. Technical analysis, so examines types and quantities of materials proposed. Oftentimes when we perform our audits and examine proposed material or labor hours, we might reach out to DCMA or the command technical personnel to request a review of the material kinds and quantities or labor hours. Again, as I mentioned earlier, We're auditors, not engineers, so sometimes we need help in confirming that the quantities and types of materials being proposed are reasonable. And then we will incorporate that technical review in our overall audit opinion. So, and then the last bullet here, unbalanced pricing. So performing a cost price analysis also assists us in identifying the potential for any unbalanced pricing, which exists when, despite an acceptable total evaluated price, the price of one or more line items might be significantly over or understated. And unbalanced pricing may increase performance risk, which can result in payment of unreasonably high prices. So a cost analysis will help us avoid that as well, because again, we're looking at the individually priced cost elements and line items. Any questions? All right, slide 78. I touched a bit on technical analysis in the last slide. Here we have a bit more information on the types of technical analyses we might request or get from, the commands or DCMA that have those engineers working there. Briefly let you read over these, but that, kinds and quantities of material is a big one, labor hours, labor mix, scrap spoilage, anything that's kind of out of our wheelhouse as accountants. All right, slide 79, subcontract pricing. So per FAR 15404-3, the prime is responsible for conducting an appropriate cost or price analysis to establish the reasonableness of those proposed subcontract prices. We talked about this in the last presentation as well. They should include those results of those in their pricing proposal. So include those cost and price analyses in the proposal with their prime submission. And in some cases, they will be required to submit certified subcontractor certified cost or pricing data to the government as a part of their own proposal. FAR has requirements that talk more to this, but I believe it's like when the proposal is $15 million or more, they have to include the subcontractor COPD with their prime, in their prime proposal. Any questions? All right, so slide 80. All right, this one has a lot on it, but basically FAR 15404-3 requires the contractors to submit that certified cost or pricing data over that $2 million TINA threshold. Regulations also require the contractor to submit the subcontractor to the government. This is kind of where I talked about that 15 million. So if the subcontract estimate is more than 15 million, or the estimate is more than the applicable dollar threshold for the required certified cost or pricing data and more than 10% of the prime contractor's proposed price, then and the contracting officer considers the submission necessary for adequately pricing the prime contract, those are the requirements for when the subcontractor cost or pricing data needs to be included as a part of the prime contractor's proposal submission. And that's in FAR 15404-3. So moving on to slide 81, what if I am exempt from having to certify? Great question. We'll talk about that in slide 82. So FAR 15403-3A1 states that in those acquisitions that do not require certified cost or pricing data, the contracting officer shall obtain data from the government or other secondary sources to determine fair and reasonable price, request data other than certified cost or pricing data, which Lashaya talked about earlier, from the offerer to the extent necessary to determine that fair and reasonable price, determine if cost data are necessary when there's no adequate price competition, and require that the data submitted include at a minimum appropriate data on prices at which the same or similar items have been previously sold, adequate for determining reasonableness. So it's all kind of in summary to determine that overall price reasonableness that we talked about with a price analysis. All right, so slide 83, this is our last slide of content, and then we'll wrap it up and get any questions. This kind of just talks about what needs to be submitted. So data submitted by the offerer should include at a minimum appropriate data on the prices at which the same or similar items have been previously sold, adequate support for determining the reasonableness of that price, and similar information as previously discussed during our cost and/or price analysis slides. So now I'll open it up. This is the DCAA Internet resources, and the next slide, on slide 84 and 85, are the ones that Lashaya already went over. So again, I'll just reiterate that there's great resources on our public website, including our audit programs, adequacy checklists, all sorts of things. So feel free to check that out for resources. And then 85, we have our small business outreach survey, but now I don't know if we were holding any questions till the end, so I'll just open it up.
Yeah, we do have a couple of questions. And the first one is, if someone is new to government cost accounting and is responsible for completing the forward pricing rate proposal and the incurred cost submission, is it possible to get help to ensure the work is accurate and compliant?
So there are, DCAA specifically can't help because that would be an independence issue, but we have tools on that Internet resources page. So I would point you all in the direction of, if you go to the checklist and tools, if you can scan that QR code, or it's very easy to remember just to go to dca.mil. And you go to the checklist and tools section, which I think is under our customers dropdown. There's an incurred cost electronically or ICE model. There's a blank copy, and then there's also a demo, which I find really helpful, that it's all pre-filled out as an example. So that might help you on the incurred cost side of things. So you can see how the rates work and how the costs flow through that model. As far as forward pricing, we have the tools like the forward pricing rate proposal adequacy checklist that would be helpful. But that's about all. We don't have any templates or anything for that. So that's about all that we would have to provide. I know there's lots of consultants out there, but, we don't have any other recommendations as far as that goes. Lashaya,
Okay.
Did I miss anything there?
And I did put the
Sorry,
link.
I was on mute, but yes, like all those, like everything you reference is on our website. You're correct. Yep. Nothing. You didn't miss anything.
Yep.
Okay.
And I did put the link to the checklist and tools in the chat. So the next
Okay, great.
question that we have is, if at any point a bidder submits a bid and then wants to readjust their pricing, what steps should be taken to do so? And I don't.
I would. Oh, sorry.
Go ahead.
I was just gonna say, so if we're talking like a certified cost or pricing data proposal, I would suggest, reaching out to your contracting officer and letting them know, hey, some circumstances have changed impacting this price, because the contracting officers are going to want the latest, and actually that's a TINA requirement, that you have the most accurate, current, and complete information going into negotiations. So you just let them know that the circumstances have changed and we want to resubmit. I know sometimes that can affect the timeline for negotiations and whatnot, but best to have the most current, accurate, and complete information.
Yeah. And I believe that is all of the questions for today.
Okay. Well, thank you so much for having us. We appreciate it, and hopefully there was some useful information for everybody in these presentations.
Yes, thank you. On behalf of DCAA and NAPEX and your local APEX accelerators, we want to thank you again for attending today. And, we went over time just a little bit, but thank you to Miss Alyssa Treber and also Miss Lashaya Cooper. We really appreciate your time today with the Defense Contracting and Audit Agency and bringing us this webinar today. Please join us next month for the next DCAA pricing series, which provides information on indirect rate and monitoring subcontracts. You will find a registration link in next month's DCAA training in the chat box. And so, yes, thank you so much. And we appreciate you staying with us today.
Thank you for having us.
Yep. Thank you. Everybody have a good day. Rest of your day.
Thank you.
Bye.